Everyone tells you to just buy the S&P 500 and chill. It's the ultimate financial, set it and forget it. But they're looking at a rearview mirror while driving toward a cliff. For 40 years, we lived in a world of falling interest rates and cheap energy. That world just ended. The S&P 500 is now the most crowded trade in human history, concentrated in just 7 companies that are priced for a perfection that doesn't exist. If you follow the herd now, you aren't buying safety. You're buying a ticket to a lost decade. But there is a way out. There are 3 specific assets that are designed to thrive in the chaos that's coming. Therefore, if you want to actually build wealth this decade, you have to look where the crowd is too afraid to go. Let's look at asset number 1. Imagine a room with 100 people. Every year, the person in charge prints more tickets for the room. At first, everyone feels rich because they have more tickets. But then they realize the amount of food in the room hasn't changed. The tickets are losing value. But then, a new door opens. Behind this door is a vault that can only ever hold 21 million items. No matter how many tickets the man prints, he can never make more items for that vault. This is the story of Bitcoin. People call it a volatile gamble. But look at the math. We are currently living through the greatest debt spiral in history. The US national debt is growing by $1 trillion every 100 days. Therefore, the denominator of our lives, the US dollar, is melting. Most people see Bitcoin's price going up and think they missed out. But Bitcoin isn't going up. The dollar is going down. It is the only asset on Earth with a supply that is completely decoupled from demand. When the S&P 500 struggles because the companies inside it are paying higher interest on their massive debts, Bitcoin sits outside the system. It is the ultimate insurance policy against the printing press. But it's not the only way to play the shift. Asset number 2 is something you can't see, but you're using right now. Everyone is talking about AI. They're buying NVIDIA. They're buying Microsoft. But they're forgetting the Lego principle of technology. You can build the most advanced AI on the planet, but it still needs a plug. AI data centers consume a staggering amount of electricity, thousands of times more than a standard Google search. Therefore, we are entering a massive energy deficit. We've spent a decade ignoring the most efficient, carbon-free energy source we have, nuclear power. This leads us to uranium. For years, uranium was hated. After Fukushima, the world turned its back on it. But now, the math has changed. We have over 60 nuclear reactors under construction globally and nowhere near enough fuel to run them. The S&P 500 is full of software companies with high valuations. But uranium is a physical necessity for the future of civilization. You can live without a new iPhone. You can't live without the grid. We are seeing a massive supply-demand gap that hasn't been this wide in 40 years. The price has to move. Therefore, the companies pulling this metal out of the ground are sitting on a gold mine, literally. Which brings us to asset number 3, the one the banks are buying while telling you to buy stocks. Think about the global playground. For 80 years, the US dollar has been the only ball everyone was allowed to play with. But recently, some of the biggest kids on the playground, China, Russia, India, decided they wanted their own ball. They are tired of the US being able to freeze their money or print it into oblivion. So what are they buying? They aren't buying more US treasuries. They are buying gold. Not as a jewelry piece, but as the ultimate Tier 1 reserve asset. Gold has been the pet rock of the investing world for a decade. It's been boring. It's been flat. But look at the chart. While the S&P 500 is hitting all-time highs based on hype, gold is hitting all-time highs based on fear and necessity. Central banks are accumulating gold at the fastest rate since 1967. They know something you don't. They know the era of unbacked paper money is hitting a wall. Therefore, having a portion of your wealth in physical gold or silver isn't being a doomer. It's being a realist. The S&P 500 worked for your parents because they had the wind at their backs. They had globalization, cheap debt, and falling inflation. You have the opposite. You have deglobalization, record debt, and structural inflation. But this isn't bad news. It's an opportunity. If you stop following the 60-40 portfolio advice from 1995 and start looking at hard assets, energy, and digital scarcity, you won't just survive this decade. You'll own it. The herd is walking toward a cliff of index fund stagnation. But you have the map. Don't be the person holding the bag when the music stops. Be the person who owned the lifeboats before the ship hit the iceberg. If you want more strategies on how to exit the system and build real wealth, you know what to do. Watch this next.